We are speaking with Kevin Hebner, Global Investment Strategist at TD Epoch. And Kevin, we've been talking about the complicated picture that is coming out for next year. And you talked about Taiwan, U.S. election, changing globalization, conflicts. And you're talking about how it really is going to change economic flows, markets. And you've got a few charts here. And I want to bring up the first one, talking about the implications of this deglobalization, the friendshoring. So this is an interesting chart. Tell us what we're seeing here.
So this chart shows imports, and the U.S. is now importing more from Mexico. In fact, with last month's data, more from Canada as well than it is from China. And that's a very different trend than we had 5 or 10 years ago, where imports from China were increasing, accelerating, and way more than any other country. And we've seen the same not just in imports in the U.S., but also if you look at foreign direct investment into China, that's actually fallen into negative territory. So Western companies are not investing into China anymore. And then if you look at portfolio flows from China into treasuries and other assets, those have declined markedly. So it's trade between China and the US, that nature of changes has changed a lot, as well as foreign direct investment, real assets by American companies and other Western companies, and portfolio flows, including, importantly, Chinese money into treasuries. So this isn't just talk about de-risking. This is in the data, and we can see it in lots of different data series already.
Yeah, it's fascinating to see if we could extend the data series to see where it goes in a year, 2 years. I mean, it is fascinating. Yeah. Tell me, what sectors are the most impacted by the trends you're seeing?
So there's 6 sectors that we've been focused on. One is semiconductors, and that's the one that's most critical to de-risk. And that's also the one in which China is targeted by export restrictions from the US. And that's because of the military applications, for example, hypersonic missiles that semiconductors can be used for. A second one is energy. And especially with the Russian invasion of Ukraine, we've learned that energy security is always critical to national security. So that's important. A new one is AI just over the last year, and AI is a new battlefield between the US and China. The US is investing more than any other country in AI, has this wonderful venture capital ecosystem, but China's also been very aggressive and is certainly going to challenge US dominance in this area. A third would be the EV value chain, so electric vehicle value chain from lithium refining to batteries to EVs themselves, solar panels, and so forth. China is by far dominant in this sector, and that's going to cause a lot of tension and fragilities in global markets. Defense spending everywhere in the world, given that we have 2 ongoing conflicts and 1 potential conflict, defense spending is increasing pretty dramatically. And then the 6th sector we're focused on concerns the US dollar-based global financial system. Given the increased use of sanctions against China, Russia, Iran, and so on, the countries that are aligned with China want to come up with an alternative financial system to reduce the reliance on the US. And it makes it very easy for the US to weaponize the dollar and impose sanctions. So there's more sectors in those, but these are the 6 areas that we've been focused on.
Yeah, each one of those is a 2-hour conversation, Kevin. But I know you got a couple charts there I wouldn't mind bringing up. One is taking a look at energy transition investment in 2022. Why are we looking at this chart? What caught your eye?
So in this one, in terms of the transition from fossil fuels to green energy, China is by far leading the rest of the world. And I mentioned all the different elements of that, from lithium refining on down. And so this is going to be important because whoever's in the White House next, we are eventually going to be phasing out fossil fuels, and we're going to have this reliance on China. And the history of these things is countries do weaponize their power. We have this weaponized interdependence. So it's an unhealthy reliance on China. And it means other countries need to be thinking about the supply chains and friendshoring, onshoring, making sure that they have production capabilities themselves and are not over-reliant on China.
And let's pull up, just speaking of supply chain, taking a look at the EV supply chain you were talking about. This one taking a look at global market share. Again, what should we be paying attention to here?
So in this case, it just shows that the main companies producing batteries for electric vehicles are Chinese companies. There's also some Korean companies and a Japanese company, but it's very much dominated by China. they're way ahead in technology and in production, and the U.S. is lagging. Europe is even lagging in this regard. And as we move through this transition, it does create this dependence and this vulnerability that's unhealthy, particularly in the world where we are in a bipolar world, and the fissures are becoming larger.
Is there, just to finish up, Kevin, we've got about a minute, but I know that you talk about maybe perhaps investors may need a new mental model to navigate
Yes.
2024 versus, what we've had for the past decade. What do you mean by
Yes.
that?
Yeah, that is the most critical point. So we're fundamental investors focused on free cash flow, return on invested capital. And the normal way that we think is, we base our experience on what's happened over the last decade or 2 decades. And our view is that this is not going to be a great guide. And there's going to be blind spots if you do that over the next decade or so, because the nature of inflation, interest rates, labor costs, and the sector distributions will be quite different. So we do need a different mental model, not an over-reliance on what's happened over the last decade or two. And that's true whether you're a fundamental investment or a quantitative investor in which you've trained your data on what's happened over the last decade or two. So this new mental model for thinking about investing over the next decade or so, I think is critical.
Kevin, it is always a pleasure. Please join us again, and next time, hopefully in person.
Okay, thank you, Kim.
All right, that's Kevin Hebner. He is a global investment strategist at TD Epoch. Still ahead, Nicole Ewing of TD Wealth tells us about key end-of-year deadlines to get on top of as the year comes to the close.